Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1886th edition of Short-Term Trading Live with Oscar. Good evening, traders. This video, the 1886th installment of these educational videos, coming at you on a Wednesday night, on a Tuesday night for Trading Wednesday, Jan 30th, 2019. And what is Wednesday? It is day 2 of the FOMC meeting, or it is day 2, Fed day 2, where the federal government will make their decision on interest rates. So there is no trading indices on Fed day. That is an OMNI rule. In the past, we used to break it before interest rate movements mattered. Now we're at a point where interest rate movement, no interest rate movement, all of it matters. So we do not trade indices on a Fed day, day 2, when there's going to be a decision. So let me continue. Futures trading, stock trading, just about any type of trading is extremely risky, can and does cause financial loss, substantial financial loss. Please know the risks behind this game. Never trade without stops. Always come down to livewithoscar.com and join me in my free live trading room, and I'll help you get through these rough and tumble markets and teach you some of the tips, tricks, and techniques I've learned over my 37-year career. All right, traders, so emini S&P daily bar. You've seen this very same chart in video after video, but there's not much we can do about the market when it stays in one spot. It is what it is. This is what we've chosen to do for a living, so get excited by it, okay? Here we are. 200 bar moving average. As you can see, when the market finally got below it, failure at it. Then it got below it again. Another failure, which then got below again and led to another failure, which was a miserable one. So the 200 bar moving average is up here, and it's above everything. The S&P did drop all the way down, rallied back up, and as you can see, we've got these two areas right here. Then we dropped, and on the way back up, this area equal to that area is certainly going to matter. So before we ever got up here, before any of this ever happened, I labeled this going to be a caution area, and once we get up there, it should get tricky, and whatever happens out of this caution area should set the tone for where we go next. But we've been stuck in it for 10, 12 days already. I mean, just standing stuck here in this caution area. I'm assuming we certainly need to vacate the area. I assume we vacate the area tomorrow, because tomorrow's Fed day, and whether the Fed raises rates or does nothing, and I don't think they would do anything, that should give us the catalyst to get out of this area right here and get away from this whole thing and move on with wherever we're going to go. So wherever we go next, we will go. I would say that the FANG stocks right now are pointing to us moving lower before we move higher, but we'll take this one day at a time. So E-mini S&P, we certainly need to vacate the caution area. That should happen, but there is no trading by OMNI on Fed Day 2. And, just a little statement about what I've been hearing about on television, on the street, in my trading rooms, during my YouTube Live. Many of my Omniacs, and of course the street, the news, it's all over, are speaking of the same topic. Many think that Powell's going to come out tomorrow and say that we are no longer going to reduce our balance sheet. And I say, hogwash, that's not a chance. You know why? Powell knows something that anybody who owns a huge portfolio of real estate or bonds or stocks or anything else knows. When you want to liquidate, you do that during good times. You liquidate when the market is in good shape, because how on earth would Powell liquidate $4 or $5 trillion worth of a balance sheet if everyone's selling and we're in a crash? If we're in a 2008 style crash, the market's going down, how does Powell then, reduce the balance sheet? That's not possible, right? So he's got to reduce the balance sheet now while times are good. Think of the balance sheet as real estate. If you had a huge real estate portfolio before 2008, the best time to have sold it was before the market cracked in real estate in 2008 and 9, because then everyone was trying to sell, and how on earth could you? No one could. So how would the Fed be able to sell their holdings if they waited for the markets to go wrong before they sold them off? This is the time for the Fed to continue reducing its balance sheet. So I hope Powell doesn't succumb to what I think is pressure from politicians, from the street, from the news agencies, that he should back off on reducing the balance sheet. And I say, as I began the statement, hogwash. Let him reduce while he can, so God forbid we have another crash, he can then afford to buy more and bail us out, right? What if we already still have the $4 trillion and something goes wrong? We're going to do another $4 trillion on top of it. Let him reduce the balance sheet. This is the time to get it done. That's all I had to say about that, but it's anti what I've been hearing on the street, but I think the street is absolutely incorrect. There's no way Powell's going to succumb to that pressure. So here's your E-mini S&P. Remember, we'll be not trading this on Fed Day 2. Something that does catch my interest and we might actually trade, however, is gold. Look at this chart. The bull flag I showed you in last night's video started to break out. The gold looks fantastic. The average pop, according to my analysis, extends to about 1365. We're trading at 1315, 1316 at the moment. That gives us a good 40, 50 bucks to run up there. I don't know if it'll get right to 65. So we call it $40, $50 to get us up there, and then we'll see what's going to happen. That very well should be gold's fate moving forward, at least for day trading. Tomorrow, if you want to trade anything, buy some gold and see where you end up with that. And then there's a very interesting stock that I looked at for one of my OMNIACs, and I'll look at it again with you guys. So traders, take a look at this. Look at Amazon. I showed this in yesterday's video without this bar right here. We removed that bar. It wasn't there. And I showed that the Omni stays far away from Amazon. When it gets near it, it holds really well and has a nice explosion. But it stays far away from the chart. And then look what happens here. They interact. Amazon breaks the Omni, runs up, as you can see right here, just misses it, and breaks. Runs up again, gets near it, breaks, gets near it, breaks, gets up here for one day. Look where we are now. I say this continues this pattern that we're seeing, and we will go lower. I don't know if there's anything wrong with Amazon. I don't think there's anything wrong with it. I don't think there's anything wrong with anything fundamentally. I'm looking at a chart that says there's a strong likelihood that we could drop from here, break through what I think there's support right here. If we could get through this barrier of support right here, right around this area price-wise, you can see that there's a lot of action here as well. But right around this area price-wise, there's decent support. If you get through that support, this should crack. So one of the major FANG stocks is telling us that the stock market wants to go lower, not higher. I could show you 3 other FANG stocks pointing in the same direction, maybe 4 other ones, or maybe all of them, all 5 are. So for now, until the market does gain its legs and move higher, I'm going to take this as an indication that we could very well have lower to go in our stock market before it gains its legs. We'll take it one day at a time. Traders, I give trading recommendations 24 hours a day. We send signals when to buy and sell, where to place your protective stops. I am offering a free trial for 2 weeks. Just come to livewithoscar.com. Join me in my free live trading room and ask about the free trial. I'll be more than happy to hook you up with it. You will be charged zero, nothing, nada, zero. I charge nothing for this free trial, so don't get nervous. Come on down to livewithoscar.com. Just watch the OmniRex for a couple of weeks and see what you think. All right, traders, keep your emotions out of trading. One of the best things you can do, in my opinion, to help keep those emotions at bay is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, traders. I will see you all at livewithoscar.com.